Welcome back, everyone. I'm super excited today to have Joe Euphrat on the show. Joe is the managing principal and co-founder of GreenRock Capital. They're based in California, but they work nationally. They're a C-PACE capital provider. And we're going to be talking about senior lender consent. This tends to be a big sticking point in the industry. So we really just want to unpack it, dispel any misconceptions, really explain what it is and how it works. For those of y'all that don't know, all CPACE assessments require the approval of any existing lien holders on the property. So consent from the senior lender is a requirement. So Joe is the expert. I'm going to let him
Okay.
explain it in depth. But so before we kind of get into the rationale, Joe, would you mind just talking about what senior lender consent is and how it works?
Sure, Olivia. So some context here is the PACE financing is assessment financing. It's foundation, and it's been around. Assessment financing's been around for, in many states, for over 100 years. And in all loan documents, existing senior loan documents, there was always and is always the term permitted liens, which always historically and does today still include taxes and assessments because they were always kind of involuntary. So when PACE industry kind of started, rather than hiding behind the veil of permitted liens, the industry, ourselves and our peers, thought it would be appropriate and best to have this all transparent, where instead of hiding behind the veil of permitted liens, the PACE assessment needs to be actually approved by the senior lender, and thus the context of this lender consent, which is all of 2 to 3 pages long. And at the heart of that lender consent is language to the effect that the lender acknowledges that the PACE assessment is not an event of default under the loan agreement. So it's just very transparent. So that's the context and the history of the very short lender consent.
Awesome. Thank you for that.
Yeah,
And you and
sure.
I have talked before about, how long you've been doing this and how long you've been sort of, dealing with this part of the process. So I'm interested to hear from you how you feel attitude towards CPACE among that senior lender community has sort of evolved. I feel like they're kind of coming around more and more, but I'd love to hear from you.
Yeah, they have. That's right, Olivia. They have. It has evolved. We're encouraged in terms of the tenor of conversation we're hearing. As some context here, when CPACE started, I'll just use the word PACE when I say CPACE, but
Mhm.
when PACE started over 11 years ago, thereabouts, nobody really knew what it was, including the senior lenders, even though they were familiar with assessment financing because they were already exposed to that, as I referenced earlier.
Mhm.
But in the earlier days of PACE, frankly, it was mispriced capital. The way it was priced just didn't make any sense. Meaning that considering how low levered it was, i.e., 20 to 30% of value of the property, PACE that is, it should be priced appropriately. And it was maybe generally stated, on average, it might have been double the cost of the senior lender at that time. So you go to a senior lender who had maybe never heard of PACE financing, explaining what this is, and the tax, when they get their head around it, they kind of go, wait a minute, this is a tax lien. This is ahead of me as a
Mhm.
senior lender, and it's double my cost. That doesn't make any sense to me. There's the front door. No.
Mhm.
So fast forward, we always knew that more capital would be coming into this asset class, which has been the case, the PACE asset class, and that translates into, generally speaking, trend lines of rates going down. And then we had the events of the capital markets over the last couple of years. And all of a sudden, CPACE financing now, generally speaking, especially for new construction projects, could be and is below the cost of senior level debt, where our personal view is it should be,
Mhm.
considering that it's one of the most senior secured items in the capital stack, and it's relatively low levered. It should be priced below the cost of senior, and we're not the only ones who think that, by the way. So
Mhm.
when you now have more understanding in the marketplace with senior lenders and rates that are more logical, all of a sudden the senior lenders are saying, "Okay, I'm getting my head around this now. I'm taking the time to understand it. My peer group, they're getting comfortable with it." It's not that every senior lender is embracing this with open arms, but a lot more senior lenders are coming around to understanding and being okay with CPACE financing. So we're generally really encouraged in what we're hearing.
Yeah, absolutely. So suddenly we saw this shift in the capital markets that kind of made C-PACE more attractive. But like you said, there are still some people who aren't totally familiar and might get tripped up on the position of the assessment. So, I mean, talk about some of those unique qualities of C-PACE that should mitigate concerns around it being a competing lien.
Yeah, it's a great question. CPACE, maybe in terms of why it would be attracted to a senior lender, at the heart of it is it accretive? Let's say it's a new construction project, number one, because we can get her in terms of like different applications of CPACE. But let's stay with new construction right now. Is if it's helping to finance a very efficient building in terms of energy efficiency, water efficiency, building resiliency, what have you, and if it's accretive to the capital stack, well, then that's a win-win for everybody, including the senior lender.
Mhm.
Um, it doesn't eliminate risk. At the end of the day, if CPACE financing is in place, you have an assessment that's part of the tax bill.
Mhm.
So you look at coverage analysis, which is the appropriate way to look at this. And so, to a senior lender, it's just, is this accretive to the capital stack? And overall, with the PACE, is it a situation where my combined LTC or loan to cost is below the limit I like as a senior lender? Those are all ways of making this more digestible to the senior lender and improving the overall capital stack to help get a project financed. In the case of the refinancing, the recapitalization, we're seeing a lot of that today, where PACE can be used to reimburse and look back for PACE eligible improvements. Those proceeds could be used to pay down the existing senior lender and maybe replenish some reserves. So we're seeing senior lenders becoming more comfortable and familiar with CPACE, where all of a sudden they've said, "Oh, I can be kind of my exposure can be reduced. I'll still look at coverage analysis because I have this assessment payment, but I might be able to be paid down with PACE reimbursement proceeds." So that could help be a way of reducing the risk to senior lenders in that situation.
So you mentioned using CPACE for refinancing. We're also seeing a lot of CRE debt needing to be restructured. I mean, you
Yeah.
talked about the capital markets environment that we've been in. We have a lot of with higher interest rates and all of that, and then we have a lot of CRE debt that's maturing in the coming years. Is CPACE being used to restructure debt, and are senior lenders comfortable with that? In order to provide some liquidity if you're in like a refinancing crunch.
Definitely. There's a lot of transactions in our pipeline and in the industry where it's either been closed or it's in the pipeline to be closed, and that is PACE being used to reimburse for funds spent on PACE eligible items, and then those proceeds are used to pay down a big chunk of the senior debt.
Mhm.
And again, fund reserves appropriately. And then in the case of the PACE reimbursement, you could capitalize interest for maybe a couple of 2 years or so. And so you can have some cash flow cushion to help kind of get through this period of time. But we're seeing a lot of activity in the commercial real estate market with PACE as part of a recapitalization to help recap a building that was built very efficiently as well. So those, the public policy and the financial benefits definitely can and do coexist.
Yeah, absolutely. I mean, one big thing that we always like to shout from the rooftops is just the public benefit of
Absolutely.
it's you can't be looked at from a perspective of this is just a way to restructure, like rescue capital, things like that. It's
Right.
it's a
I
public
hate that.
benefit.
Yeah, I hate that
Yeah.
term, rescue
No,
cap.
exactly, because it's
Yeah.
really not. I mean, it's not that's
No.
not how it's used.
And it's very important. They definitely can coexist. You can actually have public policy coexisting with, or achieving public policy coexisting with financial benefits associated with just a recap, for example, as we were talking about, or PACE being part of an accretive capital stack for a new construction project.
Exactly.
Yeah.
Yeah, it can be used in many ways.
Yep.
So I mean, what would you say to a property owner who really wants to use CPACE, but they're getting tripped up in the senior lender consent piece of it? They've got a senior debt holder on the property who, isn't isn't familiar with CPACE might be uncomfortable with it. I mean, how can they
Yeah.
present CPACE as sort of a win-win?
Uh, so two kind of a minimum two scenarios. One would be the scenario is that the senior lender doesn't really understand CPACE financing. For example, the situation where there can never be a due and payable of the outstanding principal amount. Under any situation, there's never an acceleration of
Mhm.
the outstanding principal amount. Well, maybe a senior lender doesn't know that, and they might think that if they don't pay my tax, if or if the owner doesn't pay the taxes, then there's an acceleration of the outstanding principal amount. Well, that's not the case. If that were the case, I could understand a senior lender having real problems. So the education component is a key item here. Just really how CPACE works. The situation where or the reality of there is literally no loan agreement with CPACE financing. You don't have financial or operational covenants. So it's very passive capital. So it could be an education, and we have, and our peers have, FAQs developed in the industry, and Lone Star Pace does as well, I'm sure, in
Mhm.
terms of just FAQs. So it's the educational component. The other scenario is that the senior lender fully understands all that, and they just are just a flat out no
Mhm.
because there's somebody on the credit committee that just says, I'm never going to approve of PACE financing. I understand how it works, but it's always going to be a flat out no.
Mhm.
If that's the case, well, then the only way to really, and if you want to use PACE as an owner, is that you can bring in a new senior
Mhm.
plus would say with PACE, recap proceeds together to recap the entire project and take out the senior altogether.
Mhm.
Again, if it made financial sense to do so. So
Mhm.
those are it's not the magical tool that works all the time, but it might be the case where a senior lender is just for whatever reason, it's just still today a flat out no, we don't like PACE financing and we're never going to approve it. Well, whatever. My
Mhm.
personal view is I think those kind of lenders will come around eventually
Mhm.
because they're going to see their peers being okay with it, and they're going to see their clients saying, "I'm going elsewhere because this is ridiculous." It's a great asset class. More senior lenders are coming on board with it, and so, but when will that happen? When all senior lenders are on board? I'm not going to speculate.
Well, I mean, what is it today? It's something around like 300 banks and financial institutions have consented to PACE. So, I mean, that's a pretty good number and it's grown dramatically.
Yeah, and I think I know what list you're talking about. There was a
Yeah.
list of, yeah, but th that list was developed years ago where it could have been a bank who did a deal in Maine for
Uh-huh.
$100,000, and then the sudden the view was that that bank is good with all PACE financing, which
Oh,
isn't the
so
case.
it's not actually as big
It's
as it.
no, I now today, if you and I don't know what that count is, Olivia, but in terms of the actual number of institutions that have approved of CPACE financing, yeah, I bet you're in the couple of hundred, but it's not that list you're referring to. There were some,
Okay.
yeah, but
I'm gonna cut this part of the video out then.
yeah,
I'll
yeah,
cut this part of the video out. Okay, I'm gonna do like a slight pause so that I have room to edit to
yeah,
cut.
yeah, yeah.
Okay, well, I mean, that was all so helpful. Thank you so much. It definitely seems like the tide is turning a little bit, and hopefully it continues to turn. I think just getting out there and demystifying
Oh,
the misconceptions is going to be super helpful. So,
yeah,
so Joe, thank you so much for joining us. I really appreciate it.
absolutely, Olivia. My pleasure. I really have enjoyed it.
Yes,
Thank you.
thank you so much. And for anybody who has any questions for Joe or has a project that they think GreenRock could help them with, I'll put his email in the last slide of the video. And as always, if you need an administrator for a project, please reach out to Lone Star Pace if that project is in Texas. Okay, thanks so much, Joe.
Thanks, Olivia. See ya. Bye.